Predictions of a continuing market crash. Let's have a look. Hello everyone, Florian Heise here and welcome to another episode of HeiseSays. I have my lunchtime stein and I thought we'd have a look at this article from the ABC regarding predictions of a continuing stock market crash. Now before we go through this, let's just jump over to Trading Economics, one of my favorite websites. And you can see here, at the time I'm recording this, the ASX 200, which is an index of 200 prominent companies on the Australian Stock Exchange, is at 49.47. So, there you go, look at the top of the chart, it's above. I can't actually get to that part of the chart there because of the time frame, but we were sitting at 7,050 just in February. And we'll jump out here to 25 years to give you an appreciation of how sharp that drop was. These recent gains, look at that. It's barely a dot on this line, guys. So we'll have to just keep watching it. Will we hit GFC levels? there you go. Just before the GFC, we were at new all-time highs. All-time highs. So we're right back to what? 2006 levels. So let's have a look at this. So, if you ever needed convincing that financial markets have become completely divorced from reality, look at the events of last week. Over the course of 4 days until Friday, Wall Street went on a tear, notching up huge gains, which by the end of Thursday's session put it more than 20% ahead of where it begun in the week. So, this is the thing. We're in a falling market. And during a falling market, you'll often have big jumps as well. Big corrections. It's so emotional. It's crazy. It's crazy. I've stepped back. I was doing a little bit of CFDs. Right now I'm just stepping back and just investing in long-term things at the moment because it's a little bit too crazy for me. Technically, that's what traders call a bull market, a sign that the economy is returning to strength and company earnings and hence share prices are in recovery. Sure it is. So, the performance based on the hope that central banks and government stimulus would insulate financial markets from a global economic downturn was more BS than bull. Well, yeah, he's right. Money print to go brr, guys. It's just crazy. For more than 3 decades, central bankers have played puppeteer to financial markets, propping them up when things turned ugly. And there you go, guys. There you go. We're not in a true free market. We're not all those socialists and communists there who are going, oh, this is the end of capitalism. It'd be nice if we actually tried it for once. But guys, we're not in a free one. Look at central control right down to this. And it just permeates all the way through. If last week proved anything, it is that they haven't entirely exhausted all their powers, but the looming economic downturn, delivered with such speed and ferocity, is different from anything we've ever witnessed, one that could reshape society and the way we live our lives. We've only just entered a recession that is shaping up to be one of the most painful in at least a century, as millions of Australians see their jobs evaporate, their lives upended, their savings eroded, and their health imperiled. The wild ride on global markets last week followed a month of perilous falls, hasn't been witnessed since 1931, when the world was in the grip of the Great Depression. Now here's the thing, guys, because this is just shocking, this decline. And there are a lot of people out there that will take it very hard. And I just want to remind everyone to reach out to your mates, even if just picking up the phone or chatting on Facebook, see how they're going, particularly if you know someone who's a small business owner. Now's the time just to chat, because it can be hard. Particularly if you lose a lot, you lose everything. We've all been through tough times. And sometimes just having someone to talk to can help you. So make the effort, guys. And that reminds me, I'll ring up some friends today. So America is dragging the chain, apparently. Global leaders either are in outright denial over the scope of the problem the world is facing or are taking an overly optimistic approach. There's general consensus that once this health crisis has passed, the world will quickly resume where it left off, with business as usual. What do you think in the comments, guys? Do you think that's even possible? Do you think that's even possible? I was talking to someone today and he thinks, oh, it'll all be good. You know, they'll get a vaccine. But here's the issue, guys. How many times have people gotten the flu vaccine and still gotten sick? The biggest concern now is with the numbers of people getting infected with this illness is that it'll statistically significantly increase the chance of mutation, and it will increase the complexity of the virus and cause more issues. That's the problem. That's the real issue. That's even more dangerous than all the deaths that are going to occur from this if you get 20, 30 strains. United States President Donald Trump variously has dismissed the pandemic as a hoax. No, he never did. He did not. That's bullshit. That's fake news right there, Ian. It's fake news there. Why are you publishing that? Be a bit more legit. That was what people were accusing him of saying, and he was addressing the media as propagating that. Been missing action in terms of coordinating national response until just a few days ago was advocating a lift of all restrictions by Easter. Well, I think that's got more to say with how perilous the US economy is. Here's what I tell you. I think we're in real good shape. This is a pandemic the likes of which nobody has seen before. I think we're in great shape. Ventilators are a big deal. We've delivered vast numbers of ventilators and we're prepared to do vast numbers. I think we're in great shape. Yeah, this is part of his approach. He's a marketer. He's a positive speaker. Just in case you missed the subtlety, the US president thinks America is in great shape. Unfortunately, his pronouncements coincide with the US overtaking China as the global epicenter of the illness, with more than 100,000 infections, a quarter of those in New York, as the city's hospitals become overwhelmed. Of the 30,000 ventilators requested by the city, so far 400 have been delivered. Compared to okay, whoop-de-doo, Wuhan. Here's the thing, I don't trust any of the numbers coming out of China, guys. You can see them here from Trading Economics. And I know you've got the CCP shills everywhere. I think I'm starting to learn what the 50 Cent Army is. I mean, why would we trust that? This is a country with a horrendous human rights record. You need to, okay, if you're from China, guys, here's what you can do. If you're living in Australia, look up the Cultural Revolution. Learn about that. Learn about, Soviet times, what the Communist Party did there. Learn about all the starvation and famines that occurred, all the seizing of property of people. Socialism, communism, authoritarianism, they all go hand in hand. They're not a good thing. Ever. They kill people. They crush people. They take away your rights. So, yeah. And remember, China was advising through the WHO Health Organization that everything was fine, just as citizens of their nation around the world and other companies were getting medical supplies and sending them back via private planes. But I'm sure the faulty test kits that are being sent out now from China are, going to make up for that. So it's only just the beginning. It's only just beginning to emerge from total lockdown after more than 2 months and a massive ramp-up in medical facilities. In Shanghai, arrivals are confronted by an army of ground staff in hazmat suits who repeatedly check everyone's temperature. The longer America takes to bring the health crisis under control, the greater the economic fallout, both in terms of severity and longevity. As the world's biggest economy and the global reserve currency for now, the more America is damaged, the greater smaller nations like Australia will be affected. And here's the thing, I think in some ways, a lot of the Asian countries who suffered from SARS were better prepared than Western countries. Taiwan, so close to China, they were very well prepared. They dealt with it a lot better than Australia did. Australia didn't close their borders. Because everything was fine, apparently. So the deepest recession in a century. Economic crises often begin in the banking sector and slowly work their way through to the real economy. Not this one. As the health issue, it began in the streets, and to limit the damage has forced the complete shutdown of many businesses. Recessions usually involve sowing revenue. This time, tens of thousands of small, medium, and large-scale businesses have found themselves with absolutely no revenue. And this is why people in the comments were saying, how can these businesses shut down so fast? If you have no revenue, no cash flow, it's game over. It's just game over. Ultimately, that could feed back to the banking sector with potentially worrying effects. Well, we're seeing that already. We're seeing just the liquidity in the US economy in the banking sector is being propped up by the Reserve Bank. Just look at the repo market, how much money they're pumping in there. And now with QE. Our banks and those in much of the developed world are in far stronger shape than a decade ago, following a concentrated campaign by governments and central banks to force them to bolster their reserves. They fought it all the way. What? Sure. How much of our wealth, or how much of the reserves of our, or assets that are considered part of the reserve of our banking system are tied up in housing? Just a question I'm putting out there, guys. What's going to happen to our housing market? You know, with auctions shut down and property going over, and that foreign investment that's really pumped up our housing sector, or did back in the day. How's that going to go now? So a sharp and prolonged rise in bad debts and mortgage defaults will hurt them, potentially putting the financial system in risk. That's why the federal government is targeting households for relief and enlisting help from the banks. This won't be easy. If you asked Reserve Bank Governor Philip Lowe 6 months ago about his worst nightmare for our economy, there's a strong chance he would have replied, a sudden spike in our unemployment rate. Well, I mean, here's my favorite chart just about their wage predictions. You can see, guys, I mean, who trusts anything they're saying? The nightmare scenario is unfolding, and it occurred far more rapidly than anyone could have imagined. As the horrifying scenes outside Centrelink offices last week showed, hundreds of thousands of Australians have suddenly found themselves out of work and unable to pay their way. With world record levels of household debt, much of it tied in real estate and mortgages, unemployment equals loan defaults. That hurts banks, which explains why they are going all out to assist the federal government. There's a negative feedback loop here. Desperate people don't spend. That accentuates a downturn, fueling even more layoffs. According to investment bank Morgan Stanley, up to 2 million Australians are exposed to the most affected industries such as tourism, retail and hospitality. And as their charts below show, the resulting recession will leave more of us out of work or unemployed or underemployed than the last big recession in 1990. Well, yeah, I mean, there you go. Jobs at risk. We've talked about this. Nearly 2 million. Other examples I've looked at is 2.7 million. So more pain for the stock market. You don't quickly bounce back from a recession, particularly one that's severe. Businesses can be crippled, confidence destroyed, and leaders wary. What's needed is a vaccine. But will a vaccine work, guys? Will people take it? Will people trust their government? Or will you need multiple ones? This is the thing, guys. This is the big unknown, is the potential for mutation with just the number of people infected that just grows. It just grows. It's exponential. So more pain for the stock markets. One of the key measures announced by Prime Minister Scott Morrison and Treasurer Josh Frydenberg was a relaxation of superannuation rules, allowing those in financial distress to access up to $20,000 this year and next year. It may bolster spending and give the economy a lift. Oh, people get to access their own money. How generous of the government. How generous. The only problem with the plan is that it will put further pressure on the stock market, because the only way super funds can provide that kind of cash to their members is by selling shares. In recent years, industry funds, which now dominate superannuation and which have union members on the board, which I added in there, have piled into infrastructure and other alternative investments in a bid to diversify their source of income. Investments like toll roads and airports, however, aren't easy to sell, so to meet the expected cash redemptions, they'll have to offload liquid investments like stocks and bonds. Meanwhile, many of our corporations, in order to survive, will need to raise more cash from shareholders. Those that don't or can't will come under significant pressure, particularly if the recession extends into next year. Several may collapse, undermining confidence in stocks. But there's a much bigger threat to the stock markets globally. Many big multinationals have taken advantage of ultra cheap loans and have hocked themselves to the hilt over the past decade to buy back their shares. It's really interesting when you start going down this rabbit hole, all the things you learn. It really is. You know, it puts it all into perspective, doesn't it? Mostly, they've just handed money straight back to the shareholders, exactly. So they still owe vast quantities of debt, but have nothing to show for it. Around 13 trillion of corporate debt globally remains outstanding, much of it raised through corporate bond markets. Corporate bond prices have collapsed in recent weeks, particularly for companies in the entertainment and tourism sectors, with oil producers also in the firing line. Car makers, chemical companies, and electronic groups are in trouble following months of supply shortages. Concerns about debt defaults have rocketed Wall Street in the past months and contributed to one of the worst credit squeezes in history. Money managers have been forced to offload anything and everything they can to raise cash, resulting in huge shortages of money. That's why the US Federal Reserve has cut interest rates to zero and embarked on an unprecedented money printing program. Money printer go brewer, guys. Thumbs up for that. It's why our own central bank has weighed into money markets, pumping billions into the system. The world suddenly has become a dangerous place. Make no mistakes, financial markets have further to fall. Well, there you go, guys. There you go. What do you reckon? What do you think we'll see the ASX 200? When do you think we'll hit under 4,000? Do you think we'll see a 3 in the beginning of it? Do you think we'll lose another 1,000 points? Let me know your thoughts and opinions in the comments below, guys. Thank you all for watching. Please like, share, and subscribe to the channel. If you're a fan and you want to support us, there are a few ways you can. You can join the channel on YouTube or Patreon for a small monthly fee. You can support the channel via our affiliate links at Amazon or eBay for your consumer purchases, or Independent Reserve and Kucoin for the crypto traders. You can get our merch from the HeiseSays website or Teespring. We also have the ability for you to donate via PayPal or send us gold using Gold Pass. Take care, guys. Have a great day. Stay healthy. Bye for now.